Good afternoon, friends. I am Peter Bautista, your host for the maiden episode of the Trading Room. Thank you, everyone, for joining us today. The Trading Room aims to keep you connected and informed during these uncertain and constantly changing times. We will be engaging the country's foremost executives, policymakers, market movers, and shakers in insightful and informative conversation. Aside from picking their brains, we will have the opportunity to learn from their vast font of experience, as well as know the men and women behind the titles and successes. May I now introduce my co-host this afternoon? You know her from our regular briefings. Guys, joining me is the head of our research team, the effervescent, the witty, the often shining and shimmering Miss Christy Ulan. Good afternoon, Christy. Christy. Hi, Christy. Promise, guys, Christy's really here. Christy's really here. Medyo nasa-shy lang siya, but she should be on soon. Well, in any event, this is our first event, so we would appreciate any comments and suggestions you may have for our succeeding events, whether this be our topics or the guests that we will be inviting next time around. So please feel free to add it to our chat room. Just put in your suggestions, please. Christy? Okay. While we're waiting for Christy to join us, let me share with you a bit about our guest. Our guest today is actually related to myself and Christy. In so many words, I have sought approval from the Related Parties Committee and have sought approval for the DOSRI accounts. Our guest joined the Metrobank Group in 2007 after a tour of duty in other financial institutions at the start of his career. Since then, we have had the privilege of his insight, wisdom, and support. To our viewers, ladies and gentlemen, may I present to you the CFA, the engineer, Metropolitan Bank and Trust Company's treasurer and head of financial market sector, Mr. Fernan Antonio Toto Tansingco. Good afternoon, boss.
Hi, good afternoon, Peter, and thank you very much for that very flattering introduction. I don't think I deserve half of it.
Thank you, sir. Thank you. I know you're a busy man, and thank you for joining us this afternoon. Well, first off, sir, how was your year? How has the quarantine treated you the past 12, 14 months?
Well, I think that we, the Metrobank Group, are committed to ensuring that we give the best banking services to our customers to give them access to funds and also opportunities in the market. So we've really been hard at work ensuring that our platforms are working, we're accessible to the customers, we are keeping our balance sheet safe and strong. As you see, we've done a lot of things to strengthen our balance sheet. And we would like to play for the long term. And we would like to develop and strengthen our relationship with our customers. So that's been the focus of the entire management team, including the financial markets group of Metrobank.
I like that, the long term, the long game. That really sounds nice, the long game. Sir, I'm sure our audience is a bit surprised that I announced you as the engineer. Can you share, sir, how a licensed electrical engineer ended up being a banker of your caliber?
Well, it's simple. Nobody would hire me as an engineer. But, honestly, when I graduated way back in the late 80s, I know a lot of us here weren't born yet, but it is what it is. It was right after it was right after the crisis, the series of coups that affected the country. And I think that the industry wasn't hiring. And I think it's up in an opportune time because I think a lot of our youngsters now are facing, especially I have a son who's graduating right now, and a lot of them will be facing the same situation. So I couldn't find a job as an engineer. Manufacturing was slowing down.
Mhm.
The only ones who had the foresight to start building up people were the banks. And fortunately, I was recruited as a management trainee of a bank. I had to take the board six, so I didn't work for 6 months after I graduated because my father insisted that I finish the board, and that's why I am licensed. I was licensed. It's not active now. And then and then I joined the management trainee of a bank, one of our competitor banks. I think that it gave a lot of insight, and I hope that a lot of the youngsters will consider that opportunities are actually open, maybe not in the thing that we plan for.
Okay.
We should keep our eyes out for opportunities outside what we really think we're going to do. And I think that so far so good. I have no regrets moving to the banking industry, and I think that it's been a good ride for me. And I met a lot of wonderful people. It has broadened and enriched me, and I think that that's really a good move as far as luck is concerned. If you think that it was planned, no, it was not planned. It just happened. I never wanted to be a banker, but here I am.
And we are all the luckier for it that it happened. That it happened. So you mentioned that your son or your daughter is graduating. Is he or she following your footsteps? Are there plans of following the Mr. Tansingco's footsteps?
I don't know. I mean, I leave it to them to be open to what they're actually quite technical. I think a lot of all of my kids are quite technical. They like technical stuff. They like computers. They're quite good in numbers. But I've always told them to be open and look at things holistically. A lot of things that are happening now are actually major changes, right? So, for example, if banking was a lucrative career in the past, we don't know if this is going to continue. If a lot of the career paths that people wanted to do looked exciting, who knows what the future will bring. So I'm just telling them, be open, keep an open mind, look at all the opportunities that open up for you.
That sounds advice for even our viewers. I think right now, sir, we have a good complement of attendees that are both investors, retail, and institutional investors are joining us. We have some issuers also that have joined our webcast this afternoon. So you mentioned, sorry for dating us, but you mentioned the 80s. So over the past few decades, what are the biggest changes to the market since your beginnings as a trader, sir?
Oh, the markets in the Philippines has evolved so much. And I think even for the rest of the world. In the past, we as bankers wanted to be paid by just providing access to the customers. We provide access to money. We provide access to markets. We provide access to, to investors. And we were paid for that, right? Just providing access, just being a bank. A lot of bankers think that they deserve to get the goods. Over time, the markets have really evolved and matured. And right now, we have to work for everything that we earn. It's not just enough to be able to quote a bid and offer price for securities and to give people access. We have to give a lot more things. Tight pricing, timeliness, ability to be contacted at the client's discretion, advice, and I think that that's a big part right now of banking. We have to provide advice, a lot more advisory services, and I think that that's really a bright spot for First Metro. We don't deserve our money unless we can provide intelligent banking. And right now, if you'd notice, pricing has been commoditized. Foreign exchange has been commoditized.
I agree.
Electronic banking has disintermediated a lot of the banks. And in fact, we see people, non-banks, eating up into our markets, remittances, payments, to name a few segments.
Yeah. So basically, competition is everywhere now, sir.
Competition is everywhere.
It's everywhere.
And I think that one thing to note that the biggest financial institution right now in China, or one of the biggest, is Ant Financial, who is owned by Alibaba. Imagine Ant Financial outperforms the big banks, the big four policy banks, in soliciting retail investments. And I think that we as bankers have to be cognizant of these risks and of these threats to us. So going back, it's not enough to give access. It's not enough to say, hey, I have this product. We have to make it perform. We have to make it accessible. And we have to give proper advice to our customers.
Understood. Thank you for that. Actually, when you think about it, hindi naman to shameless plugging, but banking has evolved from being access to being meaningful.
Yes. Correct.
And on that note, sir, on that note, may I call in my co-host this afternoon, Ms. Christy Ulang. Hi, Christy.
Hi, Christy.
Hello, hi, good
We
afternoon.
missed you.
Sorry for the glitch.
Sorry.
Huh? I wasn't among the panelists. Oh, so it's the permissions.
Nahit
glad
ako,
to be
akala ko
here.
nawala ka.
Thrilled to be here. Good afternoon, Sir Toto, and
Good
the rest of the
afternoon, Christy.
followers of First Metro. Congratulations to you, Peter, for having this debut seminar. In other words, keep safe. To be short.
Thank you. Sir Toto, since we've talked about the markets, the fixed income market has been on an upward bias since January this year, since the start of the year. Where do you see interest rates for the rest of the year, sir?
Well, a lot of the interest rates have moved almost 100 basis points in the start of the year, especially on the long end of the curve. And we have to really look at what drove it. I think that there are two main drivers now. First is our own inflation, which has really gone beyond government expectations. And secondly, our the U.S. interest rates. And I think that's a big driver of what brought up interest rates to this level. However, there are also a lot of factors that we have to consider of why these interest rates are high. And on inflation, it's really on supply side as far as the Philippines is concerned. This is supply side inflation. We're seeing really expensive prices, especially for food, pork, and chicken. In fact, my family is really a heavy chicken eater, and we were almost desperate because we couldn't find chicken.
Sorry, Christy, you were saying?
Chicken Joy reminded me of Chicken Joy.
Yeah, it's really very my kids don't eat anything but chicken. So there was a time when we couldn't find chicken in the grocery, and prices have really spiked. So that has brought our inflation to 4+% right now. And I think that while supply side pressures will continue, inflation will go up. U.S. interest rates, the other factor, I think that was really caused by expectations that the U.S. economy is on its recovery mode. And it's, I think, going ahead of itself that U.S. will now have to start hiking rates. But I think that while the data in the U.S. seem to point that way, jobs seem to be being created, the economy seems to be on an upswing, I think that it's really premature. I think that this crisis will affect us really much longer. And I think that the after effects of this crisis will still have to be felt. I mean, it's really too early to do that victory dance that we've licked the pandemic. And I think that we will still encounter a lot of pressures right now. Reminds me of the situation in the 98 financial crisis, when the peak of the problems actually happened in 2001. Why is that? It's because a lot of companies will have to run through their cash, go through their stimulus, and live through. They still have momentum from before the pandemic to continue operating. But as we see, this is a finite resource, and eventually market discipline will come in. And in this case, unfortunately, a lot of people will have to fall by the wayside. And we're already seeing a lot of these pains coming in. So I feel that, I don't know, it might be premature, but I think that we're nearing the top of peso interest rates, and we should see a downward movement from here. Having said that, I think we've also seen the lows of peso interest rates. I don't think that a massive stimulus will be in the offing. We still think of a possibility of a rate cut from the BSP, especially if the economic numbers are weak. But our house view is in Metrobank. I don't know about First Metro and UANP and Dr. Abola, but our house view is we might be primed for probably a rate hike, depending on how quickly we recover. But we'd like to say that this is really dependent on how the pandemic goes.
Agreed.
So it's
Thank
not
you for that.
hopeless.
Sorry.
Not
Go ahead.
hopeless.
Not hopeless, not hopeless at all.
Actually, go ahead, Christy. I think since we got you late, it's time for you to pay for your supper. What's your thought on the interest rates right now?
Sir Toto has said, I'm being inspired by the fact that inflation could be reaching its peak, as earlier stated. Interest rates is approaching its peak. So, would the government measures of pork importations really make a difference, and oil prices will come down? Is that your view, sir? Also,
Yeah,
in the second half of the year.
I agree with you, Christy. I think that the markets have run ahead as usual. I mean, everybody's optimistic. But I think that our motto here in Metrobank is this is a marathon, not a sprint.
Yeah.
That we'll wake up one day to see that the after effects of this pandemic is over. I think that might be a bit premature. We will wake up one day. This will be a distant memory one day.
Yeah.
But I think that it's too soon.
Yeah, as with most crises, all these will pass. All these will pass. You will be better.
Just a matter of time.
Yeah.
Just a matter of time.
Yeah, I think Christy mentioned a bit, and you mentioned a bit about the U.S. interest rates. On that note, sir, what do you think is the ideal level for the dollar peso right now?
Well, I think that there are two ways to look at it: where the pressures will be and where it should be to maintain our competitiveness. I think that the pressures will actually move for an appreciating peso because despite this pandemic, we actually have a balance of payment surplus. You know, the BSPG gross international reserves are at all-time highs, about 110 billion pesos.
Okay. Yeah.
What, 9 months of imports or something?
Yeah.
I don't know, Christy. I think that's right. I mean, this is unprecedented. When we were growing up, we were lucky to have 3 months of imports.
The minimum.
Yeah, I mean, we were just begging to have 3 months of imports, and now we have, basically, what does this mean? We could have no exports and no inflows for 9 whole months, and yet
we'd be good
to pay all our debt, all our imports.
Yeah.
So this is a really big number. I think even compared to developed markets, this is really a big number. So the pressure is for the peso to appreciate, and left on its own without central bank intervention, that's the level that it will go to, despite the depreciation of the peso in recent days. The BSP actually bought massive amount, billions of dollars, in the first few months of the year, just to prevent the peso from appreciating too much.
Yeah.
So the pressure is for stronger peso. Having said that, where we should be compared to our competitiveness position, we have to be cognizant that we're really competing with the likes of India for BPO, the likes of Indonesia for manpower in terms of ship crew or maids.
The manning. Yeah. Yes, sir.
And we are also competing as far as our exports are concerned. And there are substitutes. Our coconut exports have palm as a substitute. So it really makes sense for the peso to be a little on the weak side. And I think that the US has seen this, that they want their own currency to weaken. I think any country now worth its salt wants the competitive edge of a slightly weaker currency, not a free fall like Turkey, right? But something that will make its exports competitive.
Yeah.
and will make its domestic industries able to compete with cheap imports. So I think that where we should be, rightfully, for a good competitive position, will be at around 49.50. I think that our view in Metrobank is at this level, but because of the bias of the currency to appreciate and its dependence on central bank action,
Yeah.
I think that this might be a balancing act, a really difficult balancing act to reach.
Understood, sir. Thank you for that. Christy, anything you want to
So if the peso's strength is has a more permanent nature, that does that mean that the dollar strength is more of fleeting type?
I think that the dollar right now is very dependent on internal domestic policies in the US, which is still evolving as we speak. So yes, the dollar, the Fed actually wants a slightly weaker currency.
Yes.
That's why they always chastise China if it weakens its currency. They even they're even critical of their own allies when these countries depreciate their currency against the dollar. So I think that the Fed will not be passive about extreme strength of the dollar. So if the dollar strengthens too much, I think that they will have to step in. But having said that, I think that people have to accept wider volatility bands. While in the past maybe 2 months, the volatility of currencies have been quite low. I think that over the near term, this low volatility environment is temporary. And over time, the volatility or the trading range of the currencies would have to widen. Like right now, we're seeing peso trading range of 5 centavos, 10 centavos. That's really nothing.
Yeah, manipis masyado, manipis. Yeah.
For us who've gone from during the Arab time or during the Asian financial crisis, 5 pesos one day.
Yeah.
Yeah.
Kasi medyo manipis talaga. Yes, sir. Understood, sir. So let me just synthesize that a bit. We see rates right now more or less establishing a new normal after the recent highs, the recent low, the recent rally. The interest rate, so interest rate should be hovering at these levels, waiting for the next best data for a reason to move. We would like to see the peso depreciate a bit for competitiveness sake. And at the end of the day, I think what you pointed out, sir, was right. That right now, during times of crisis, it really is a matter of strength. So this is survival of the fittest. Pahabaan ng pisa, ika nga. Diba? Yes, sir. Well, just a little bit of tidbit of information. We were just expecting 100 attendees today. If you could see it on your screens, we're up to 260. We actually registrations of up to 300 plus. So thank you again, everyone, for joining us.
Thank you for attending.
Yes, sir. Sir, I know you're a badminton aficionado before the lockdown. So how have you been keeping fit through the pandemic?
Well, very simple. Me and 4 of my colleagues have this biggest loser contest. I've never been able to lose weight prior to this because it's really hard to have discipline on your own, right? So we all of a sudden went together and said, "Hey, let's have a Biggest Loser," and we did it last year. And guess what? I lost 10 kilos, and I think
Good job. Good job.
Amounts. So yeah.
That's commendable, sir. 10 kilos.
10 kilos.
Wow, that's big.
Better
Amazing.
than you, Peter.
Better than me. Yan talaga pag may incentive, sir. Pag may incentive, yeah.
Achievement.
Actually, our incentive is simple, right? The incentive is not monetary. Our incentive is the loser will have to post on our Facebook, our internal Facebook, with his shirt off.
Mas mabigat sa pera ang katapat, kahihiyan.
Oh yeah, of course. The motivation. So, we were really taking it seriously. And then there's a checkpoint every month where you have to publish your weight. I mean, take a picture of your scale as you weigh it. And I think that this gives us a lot of insights, no, and that when people are watching, there's a lot of market discipline.
Mhm.
And whether it's losing weight or markets, we really need people to observe so that there's discipline. And this actually has motivated us. So I go to Biggest Loser. The loser posts his picture without his shirt on Facebook. I guarantee you will lose 10 pounds, 10 kilos.
Good job, sir. Good job, sir. I think one of the differences between the early '80s and '90s and now, I think markets are really more interconnected nowadays. Sir, your thoughts on the state of the stock market nowadays, sir?
Well, that's true. Markets are getting more interconnected nowadays. In fact, a big source of pride for Metrobank is that we've actually have a lot of funds go through us, foreign funds, big name marquee funds, who used to only trade, for NDFs, non-deliverable forwards offshore, now go through with real money and through Metrobank. I think in recognition of our active participation or our activeness in the fixed income market. So yes, markets are getting interconnected, and there's a lot more interest in the Philippines. For example, last year, a lot of companies were able to raise debt from the offshore markets, and First Metro, I think, helped us raise our dollar bond, and we have 5 times oversubscribed on people wanting to invest in the Philippines. So there's really a lot of interest in the Philippines. Unfortunately, our stock market has gone the other way. In fact, what we've been seeing in the Philippines, a lot of foreign selling. And, there's less and less foreign participation. Even in Metrobank, our foreign holdings has actually fallen quite a bit because we have to monitor as a bank. We have to monitor foreigners can only own a maximum of 40% of any listed bank in the Philippines. And we've seen it really, really fall to levels. So in the stock market, unfortunately, the foreigners have been shying away from the Philippines. And I hope that we can institute reforms in our markets to attract them back. I'm actually part of the Metrobank team that does roadshows, and we talk to our investors. And I think that some of their concerns in the Philippines is one, lack of market liquidity.
Yeah.
These guys, when they go in, they want to go in for $100 million, $50 million in one stock. Our whole market now is only trading at around $200 million. So, it's gotten to the point where it's quite illiquid. Number 2 is that the bid and offer spreads are quite wide. The cost to go in, the slippage is very high. If you have to put in ₱1 billion in a single stock, you will see that stock fall several fluctuations, right? And if you wanted to get out, you will also push it to several fluctuations. We have to improve market liquidity. And I think a big part of this is the reforms that the PSE is putting in, the ability to borrow securities and to short the market, the need for market specialists and market makers who can provide liquidity, a bigger participation of the local funds and the local fund managers. I think we also need to work on our taxes. I think that right now we're on fixed tax, right? Sales tax, whereas a lot of the markets are on capital gains, so you don't pay tax if you lose. We have to do the reforms, and in that sense, I think that our stock market is actually quite independent of the global markets. We're actually, last year, most markets actually improved, gained at least 10 to 15% near the end of the year. Yeah. We actually ended the year with a loss.
Yes.
Yeah. So I think that we have a lot to do as far as attracting foreign and interconnecting our domestic stock market. But apart from that, I think the central bank has done a lot more accessibility to foreigners on our FX market, on our fixed income market, in our international bond market, and I think the interconnectivity of the Philippines in general is quite.
Now, Christina, we remained foreign selling since last year. So I guess, and what I've heard from our friendly stockbrokers also, is the Philippines has been in conversations in the foreign fund managers. Christy, your thoughts on the equity market, please?
I think the second half is going to be a lot more promising. There's evidence of sequential improvement in corporate earnings, like beginning in fourth quarter of last year, and then hopefully in the first quarter. But on a year-on-year basis, there will be a disappointment in the first quarter. Same with GDP, still in negative territory, but rebounding hopefully in the third and fourth quarter. So the second half will really be a brighter one, and hopefully the vaccination takes off in a bigger way. And the year end, we would see the PCA pricing in the prospects for 2022, which is a lot better than this year. If I may ask, Sir Toto, if a lot needs to be done to the local market reforms and all, does that mean you don't see the foreigners coming back very soon?
Maybe a little later, because at this point in time, I think that everybody is nursing their wounds or being very, very defensive. When in times of good markets, the name of the game is diversification. And Philippines is actually a diversification strategy for a lot of the funds. But in times of so that in good times it's diversify, in bad times it's consolidate.
Yeah.
Right. Keep liquid, keep your things close to the chest. And because the Philippines is such a small weight in global indices, we're one of the first to be exited, because the portfolios will not have a big tracking error if they're not invested in the Philippines. And they really do want to have the flexibility to move in and out. So I think that we will probably benefit when the global economy booms. I think we're still a big part of the index. I think we're now a middle income country. But unfortunately, we're still not at the level that we will attract investments on our own merit. It's really sad to hear that Vietnam's stock market is actually more active than ours.
Yeah.
Right? When I went to Vietnam in the early 2000s, they actually envied the Philippine market. And when they hear the Filipinos, they actually like to consult us, mainly because our markets are quite similar to theirs, and they can relate to our market. They cannot relate to a Singapore market, and they cannot relate even to a Thai market, which is well developed. But now, unfortunately, more investors prefer to invest in Vietnam than in the Philippines, and that's really sad. I think that we have to do a lot of catching up. I think that we also have to look at, there was this news recently about a mining stock that traded more shares than it actually had listed.
That stock.
That stock.
That stock, yes.
Increased like 1,000%. I think that this market discipline should, it's a get rich scheme for a few people. It's actually hurting our market as far as the foreigners are concerned. So I hope that we can get our act together. We cannot blame the foreigners.
Yeah.
I think that we have to do our part in cleaning up our market.
You heard that, investors? You heard that, clients and friends? It's up to us, guys. Let's go second half. Go second half. A bit of a plugging here. Guys, the guys who have attended our January and mid-year briefings. Aside from those, I'm glad to tell you, inform everybody that First Metro will also be having quarterly mini briefings to be hosted by our very own Christy Ulang, as the markets continue to be even more dynamic than when we started this year. Sir Toto, where do you see the Philippine economy, and when would it be getting back on the horse, so to speak?
Well, I think that we're going to have a positive GDP this year, mainly because we actually came from a low base. And for last year, we had a very serious lockdown, and for an extended period of time. We were practically inoperative from March to October of last year. So, the negative 9.5% growth was actually a blessing, considering that for more than 6 months of the year, we were not productive. So we will have an uptick. But, because of the compounding effect, if right now the BSP is targeting 6 to 6.5%, for us to go back to 2019 levels, it will take around 2 years. And I think that's really something that's quite worrying. And I think that the risks right now is still to the downside, because if you look at our efforts in the pandemic, I think it still needs some time to take root and to take traction. For example, I hear that in the world average of vaccination is now at around 3.5 people for every 100. So around 3.5% of people are getting vaccinated. In the Philippines, I don't think we're even 0.1%. I don't think we even have one. So this 3.5 people for every 100 includes countries in Africa, countries in in the Middle East, like Afghanistan, and unfortunately, a big part of getting back in this economy is really to get our vaccination levels up. In the US, I think they're at around 20%. Singapore is in the high teens. I think that's really something that we should overcome and focus right now on getting our act in that regard. So that's really critical in saying when we could get economic recovery, because until we find it safe to go out, to buy, and to work, the economy will just have to muddle along. And if not 2 years, we're going to go, hit maybe 3 years. So, but having said that, I think there's light in the end of the tunnel. I'm always the eternal optimist. I think that hopefully we can catch up, and we Filipinos are very resourceful, and in the last minute, when all hope seems lost, we're able to recover. So hopefully, if we can get vaccination levels to at least the world standards of the vaccination rate, then maybe by the later part, as Christy mentioned, we should be able to get back to its course. But I always have to caution people, and especially companies, that looking back at history, the major impact will come later. In 90, we were talking about the Asian financial crisis. The peak of the NPLs was around 2001, 3 years after the incident, and long after the economy had positive growth numbers, right? In 98, it was 2008. It was quicker, but until 2010, 2011, we see some companies going bankrupt, right? In fact, if you look at in the US, a lot of the retailers now who just folded up actually had their big first blow in 2008, and this pandemic was actually the knockout blow that killed them.
It broke the camel's back, so to speak.
Toys R Us, right? Forever 21. These are marquee names as far as we're concerned, and they're bankrupt. They're bankrupt. Thai Airways actually was bankrupt. So it would take a while, and at the risk of being repetitious, this is a marathon. Don't make sure that we can survive
Yeah.
for 2 years. A good analogy would be the people who store up for winter. We should be still have sufficient stores, because we cannot just hope or make sure that or make our survival contingent on the economy picking up in 6 months. We're
Understood, sir.
hoping it will, but we're not sure. So yeah,
Yeah, understood, sir. Yes, sir. Yeah, I agree. We agree completely. It is the long game that matters, but it's not a sprint. It's really a marathon. Christy, anything you want to add to that?
Well, it really requires patience for investors in the equities market. When you buy the dips, you cannot really expect a linear upside. You have to really stomach the volatility, and this is a market that is for those that have the stomach to and the holding power, because this is a long-term game, as mentioned by Sir Toto.
Intestinal fortitude. Go ahead. Go ahead, sir.
Can I just add a few things, right?
Go ahead, sir.
There's this study. There's this study by Kaufman. It's a research institute that actually said that 50% of the Fortune 500 companies in the US were actually founded during crisis. Now, 50%. Well, what does this mean? That during crisis, there is opportunity. I mean, that's an often repeated saying, but that gives us a lot of insights. General Motors was founded when there was a crisis. Even Amazon was established during the .com, just before the .com bubble, and survived that. So this gives us insight that there are opportunities all abound. But what are the things that made these companies actually thrive? Being founded in a crisis, they were able to anticipate the long-term macro changes that the economy undergoes every time that there's a crisis. And, patterns, every time that there's a crisis, patterns change, patterns evolve. And if you look at what is the impact of the Spanish flu on the economies of the world, it is very dramatic. We don't see it now because we're quite far and distant from it. But a lot of companies actually thrive because of these changes. So keep your eyes open for opportunities. There are opportunities, as Christy said. There are really cheap bargains to be bought, and there are companies and needs to be filled once we recover. Having said that, we have to also change our paradigm. One of the things that we've been repeating here is that you do not want to own the biggest candle making factory when Edison invented the light bulb.
Yes, sir. So true, so true, so true.
You don't want to analyze the new economy using old tools. You do not put new wine in old skins, as the Bible would say. And I think that we need to create the new tools to analyze and to think of what are the companies that will thrive in the new economy. And we have to do more than the usual disciplines that we use. Technical analysis might not cut it. We might have to look at as diverse disciplines as technology, to look at what are the industries that will thrive. Sociology, social anthropology, behavioral trends that we're seeing. Those are the things that will impact us. How have our people's patterns changed irreversibly because of this crisis? How have these patterns changed? So, if we think that this company, which used to be trading at this price, will not go back to that price, maybe we should rethink. And some of the companies that are actually that actually did not perform in the past, we have to relook at their valuations. So that's what I think uh, we should do. The new companies, there will be a new PSA 30
Yes.
10 years from now. And I wouldn't be surprised if half of the companies in that PSA index are companies that are not in the index at this point in time.
Understood, sir. That was really really great. Guys, so we're not just supposed to buy the bargains. We should also be on the lookout for the next big thing, the next big thing. And as Mr. Tansingco mentioned, good things do come out from crisis, come out of crisis. Let me just remind everybody that we are glad to receive any comments and suggestions you may have for our succeeding guests and our for succeeding topics that you would want us to feature in the future episodes of the Trading Room. Sir, I guess this is a question from my math circle of friends. What's a book by your bedside right now?
Oh, well, because of this pandemic, I've been able to catch up on my reading. One of the recent books I've read was The Man Who Solved the Markets by Zuckerman. It's about Jim Simmons, who's very interesting because he was one of the first to use quantitative tools, this mathematical models. And I think he's one of the top performing funds managers in the US. So it's very insightful, not because we need to emulate what he did, but because of his approach, putting a new approach to the market. And he revolutionized funds management because of his insights. It's a very interesting book. Although I have to admit, I cheat once in a while. I use an audiobook. My eyes are quite bad. I also read recently Never Eat Alone by Keith Ferrazzi. It's a very good book about how networking and forming relationships can actually put us ahead. And whatever the form of the economy will be, I think relationships or people are the key to success. So it's a very good book. It's one of the readings that I was told I have to read. And I found it very, very insightful. And the other book I'm reading was A Big Heart Open to God by Pope Francis.
Oh, that's nice. That's nice.
By Antonio Spadaro. It's quite a insightful book, and I think it will give us insights to what is the underlying principles or philosophy behind our current pontiff. And there's really a lot of depth of knowledge. He actually presents himself as a very simple man, but he's very deep. And I think that in times like this, we really need more than anything to have a moral compass. And I'm quite happy to see that in times like this, we see a lot of people stepping up and doing things for others, our healthcare workers, our even our barangay officials, who we never had high regard for in the past, are now stepping up and trying their best. I mean, local government, hats off to local government. Boy, they really stood out. I mean, I'm really, really impressed by a lot of the local governments and how proactive they've been in helping. So, it's nice to see things in a different lens and to get more also of the spiritual side and the spiritual meaning of this crisis.
Guys, you heard it. So that's leading a well balanced life, even with the books that you read, guys. So there's faith there, there's numbers there, there's people there. So that's a well balanced life, guys. So as our episode draws to a close, let me just ask you, what are your thoughts on the future of the banking industry, and in particular the digitalization wave that we're all seeing nowadays?
I think, like for all of us, I think the banking industry would have to reinvent itself. Yes, we're going to get a lot of competition. Yeah, a lot of the things that was easy money for us, let's say remittances, and then facilitation of payments, and you know, uh, retail, supporting the retail channels will probably open to us. But there is always a room for banking. And there is one discipline that banks are very good at, and that is managing risk. The ability to transact can be taken away from us. I mean, people can get a more efficient channel to make payments, but managing risk is something that we are experts on. We have the ability to say who is credit worthy and who is not, what is a good bond to underwrite and what is not, what is a good investment that will give you a good risk return ratio compared to what is not. Sure, a online trading platform can give you access to any bond you want, but it's a risk management framework of who at this point in time the expertise lie on the banks that will always have that leg up. And in the future world, risk management cannot be underestimated. So some businesses will be taken from us, but we will have to reinvent ourselves and shine in other areas. We will be, instead of facilitators of transactions, we will be advisors and risk managers and people who will underwrite risk. So that's the role of the banks. Number two is that banking industry will be relationship managers. Because try as you want, who of you would be happy to use phone banking, wherein you just press 1 for this and press 2, rather than talk to a phone banker? Who of you said, no, I'd rather talk to a chat box than a real person when you have a complaint in your online purchase? So relationships are important, and that is one of the things that I think banking is. You'd want to know who you entrust your money to, right? And one of the biggest businesses right now of Metrobank, and one of the fastest growing business, is actually private banking. Why? Because people can transact online, make a few clicks, and they bought that bond or they buy that currency. They want the advice, they want the relationship, they want the hand holding, and they want the warmth of the personal touch. And that, I think, digitalization will not be able to take away from the traditional banks. So yes, there'll be a threat. We will have to reinvent themselves. We will have to reinvent ourselves, but there'll always be room for banks, just a different form of banks than what we're used to.
Guys, I've learned a lot this afternoon. We've had a great exchange, a great dialogue. Sir, are some parting words? What can our investors look forward to, and what should they be wary of in the next few months?
We've touched on it briefly. There are opportunities in the market because right now, the markets are actually in a flux and are actually not efficient. When there's inefficiency, there's opportunity. So Christy and I earlier touched on some cheap stocks to be had. Maybe that's one of the things that we can look at because the markets are not efficient. So there's opportunity in the market. There's an opportunity to make great wealth. A lot of the biggest wealth in this century was actually created when there was a market aberration and a market disruption. So I think I tell the investors, keep your eyes open for opportunities, because there's going to be a lot of opportunities, and you need the expert advice and the insights of maybe a First Metro and a Metrobank to help you guide it, because we would provide advice and access. And I think that we have some interesting ideas to show you. So I'm quite optimistic for the investment community right now.
Thank you, sir. Thank you for that. Christy, anything you want to share?
Yeah. For investors, I think we should be very aware that we are dealing with a different kind of market. It's a very treacherous market, a tricky one, very volatile. And the question is, how do you outsmart this market? You've got to be less price driven. You've got to be less emotional and detached. And you have to have that coldness when it comes to getting into the market. Uh, you've got to also realize that if you pick the very bottom, which is so hard to do, it's not going to be a straight line from that bottom to the top. So there's going to be a lot of heartaches along the way. But if you are with the right stock, you can sleep soundly at night. And that's really the essence of investing. You've got to do high selectivity and you've got to rest your case. Yeah.
Okay. Basically, in a nutshell, this afternoon was identifying that there are a lot of opportunities still out there, despite the crisis and in spite of everything that's happening in the economy and the markets. It takes discipline, it takes information, it takes people, it takes professionals sharing their inputs, they're sharing their insights with us so that we will be able to make better decisions for ourselves. That's all the time we have for today. Thank you everyone for joining us in the maiden run of the trading room. It was a productive and interesting conversation. Thank you, Sir Toto. Thank you, Christy.
Thank you. Thank you, Pete.
Thank you. This is
Thank you, Sir Toto,
Thank
for
you,
the
sir.
very nice insights.
Yes, thank you, sir. As you know, this is our first episode. We gladly welcome any comments and suggestions to continue to give you what you want. On that note, stay safe, everyone, and see you soon in the trading room. Thank you.